Secret number 4 is that you can own your bank. And you don't need a lot of money to do this. Many of the big banks like JP Morgan Chase Bank and Bank of America and Wells Fargo and Morgan Stanley are publicly traded companies, meaning these are companies that trade on the stock market. And anybody with a stock brokerage account can go out and invest in these companies and own a piece of these banks. Now, when you own a piece of these banks, you become one of the owners of the banks and you get to share in the bank's profits. Now, as a little bit of stock market 101, some companies on the stock market pay out a dividend. That means it's the cash payment that you get without having to sell your stock for doing nothing except owning a company that's making big profits. Because when a company has a lot of profits, they can do 3 things with those profits. They can save this money, they can take that money, reinvest it back into the business by opening new stores, hiring more people, or they can take that money and just give it away to the shareholders. One of the ways that they can do that is in the form of a cash payment called a dividend. So I'm going to go through a couple examples, and of course, as a disclaimer, investing has risks. You are never guaranteed to make money when you invest. In fact, you will probably lose money at some point, so make sure you always do your own due diligence and never blindly trust a random guy on YouTube. Everything I'm going over is just examples. I'm not telling you what to do, okay? So, example number 1. JP Morgan Chase Bank is currently paying around a 2.3% dividend yield. The Bank of America stock is currently paying around a 2.4% dividend yield. And then there's also an ETF. There's multiple ETFs, but just as an example, called KBWB. This is an ETF by Invesco, which is an institution that creates these types of funds. And this fund invests in many different types of banks. You can take a look at the holdings here. They invest in banks like Goldman Sachs, Bank of America, Morgan Stanley, JP Morgan. And at the time of me recording this video, this fund is currently paying out a 3% yield. Now, let me just go over a little bit of basics when it comes to investing. The advantage of you investing in an individual company is you can see a lot of upside. The advantage of investing in a fund is you don't have to put in as much work and research, because if you put all of your money into JP Morgan Chase Bank, you might feel great because you're getting some dividends. But if they start doing bad things and they go out of business, all your money is gone. Versus if you invest in a fund like this and then JP Morgan goes bankrupt, well, this fund still owns shares of other companies like Bank of America and on and on and on. That way now, yes, you have some winners, but you'll also have some losers. So your risk is a little bit less when it comes to funds, and this is where you have to know your strategy when it comes to investing. If you're not willing to put in the work to analyze and keep up with companies and understand the financials of companies, don't go out and invest in individual companies, because that can really amplify your risk, or at least I want you to understand the risks. Now you might say, well, Jaspreet, okay, if I'm just investing for cash flow, well, why don't I just keep my money in a high interest savings account where I can get 4 or 5% a year versus these are paying 2 to 3% a year? What's the advantage? Well, you got to understand the difference between saving your money and investing your money. I'm going to talk about that a little bit later. But the second thing I also want you to understand is that when you invest your money, your goal is to grow the value of your portfolio, not just see this cash flow. And when you make your investment decision, you might say, if I was comparing these 3, this one seems like the clear option. This one's paying the highest cash on cash return, the highest dividend, right? Well, let's dig a little bit deeper. If we take a look at the JP Morgan stock over the last 5 years, we'll see that JP Morgan is up around 75% over the last 5 years. Bank of America is up around 41% over the last 5 years. And then this KBWB is up around 5.5% over the last 5 years. So as a foreshadow, you can see the importance of investing your money, because you can see a lot of growth of your principal in addition to getting cash flow. But secondly, when it comes to deciding where you invest your money, the financial education of how you invest is so important, because that can drastically change what type of returns you're going to get. Of course, you can't predict what's going to happen next year, the year after that, or the year after that. But your financial education can help lower your risk and increase your returns. If you enjoyed this clip and you want to continue your financial education journey, I have another video that I think you'll love. All you got to do is click that button right over there. And for those of you who want to stay up to date on the top finance and business news, you can join Market Briefs, my free financial newsletter, by clicking that button below. Thank you for watching, and I'll see you in the next one.